Okay, I think we should start now. There's something I want to talk about the section. Okay, there are some instances whereby you took a trade and you expect the price to reverse and doesn't reverse. Do you know what actually occurred when you took a trade, you expect the price to reverse and doesn't reverse? So I will only take your time to explain to you what you should do whenever you are taking a trade on binary option. Okay, let's assume you are on a binary option trade now and you want to take a trade. Look at this current price movement. You your analysis is based on your analysis should be based on the first, the trend of the market, second, the key level, third, the candlestick formation. Okay, candlestick formation, they classify that into two ways to analyze candlestick. Okay, the first way is that you can analyze multiple candles. Okay, you can analyze multiple candles. Then second is to analyze the single candlestick. That depends on how you are taking trade. Okay, let's take for example now. Let's take for example, if the price is approaching a certain level, the first thing you have to consider is this level, is there any level here where the price might touch and reverse? Okay, or what's the previous trend? Is the overall trend bullish trend, something like this? Is the overall trend like this? Or is it a downtrend? Is it a downtrend? Then the market decided to branch out, fill this gap. Okay. So there are things we must first consider whenever you are predicting candlestick. The first is the trend. Then second is the key level. What I mean by key level can be your support or resistance. Key level can be your supply and demand. Okay. Or key level can be your fair value gap zone. Those are what can be your key level. Okay. Take a look at this example here. We mark out, you see the market reach this area here. The second time also reach this area, we have a resistance. So first thing you have to consider is that, okay, as the price reach this level, it reverse. We have a resistance here. That is a resistance. Okay, but we want to trade supply and demand. You see the market drop after reaching this high, the price drop to the downside, and the buyer start again to rise again and reach this level, and then create as a rejection, multiple rejection, 1, 2. So if the market to create a rejection from this level, if the price creates a rejection from this level, it means that in my next attempt, I'm going to be trading supply and demand. Okay, you can see that the first analysis I did here was support and resistance, not supply and demand. This is my resistance, but now I'm going to make use of it as a supply zone, which means I will be expecting the price, or I'll be expecting the market to reach inside the supply zone, then I'll enter the trade on the next candle. That will be my expectation on the next price movement. So let's see what happens. So I'm going to pick up a horizontal line. So I change the color to white. See that the rejection started from this level, and then this candle closed here, sellers entered on the next candle. That is where I'll place the line at the closing of this green candle. The closing of this green candle. That's where I'll place the line. Okay. Now what do you observe? See that when the buyers again rise to that level, we have a rejection from sellers. Then the candle close below the line. See the first line here. This see the first line, place it at the highest of the at the highest wick, the highest shadow. Then I place the second line because this is where the buyers stop entering the market. After buyers stop entering the market, sellers enter on the next candle. So which means that I will be expecting the buyers to enter inside this zone, this resistance zone, before sellers enter. Okay, which means that if the market should resume and close below this line, I will not enter the trade. I will wait for the price to close inside the zone, then I will enter the trade. So if the price closes here, don't enter the trade. Wait for the price to close inside the zone and enter the trade. So the zone is a short trading techniques that I use mostly in binary option. Okay, give me confidence to take trade whenever the price closes inside the zone. So you see what happened? This candle close below the zone. The next candle close inside the zone, and that is why sellers enter. Now that sellers has entered, you can see now that sellers has entered, we can also adjust the line. If you want to draw a resistance, you can also adjust the line. Okay, which means that you can place the line here and then second line here. But remember, I want to take trade based on the supply, not resistance. Okay, so which means I'm going to move the line to the lowest shadow of this candle, to the low shadow, low wick. Okay, okay. So I move the line to the low wick of this candle, which means that I'll be expecting another time, the second time, the price to close inside the zone and enter the trade. But if the price close below the zone or below this line, it's not satisfactory to enter a trade in this kind of situation. But I will recommend you to take trade when the price entered inside the zone, then you execute the trade. So let's see what happened. Okay, the market continued to move down. Now you see what happened. You see what I'm saying? You can see the candle, this candle closed inside the zone. Okay, and what happened? Sellers enter. Next candle formed a green candle inside the zone. What happened? Sellers enter. That is how you take trade with a short entry. Okay, with let's assume you have a $10 on your trading account now. You can just take a deal of $5 with this trade entry. Okay, $5, then give you 4 point something or approximately 86% of your profit payout. So the next trade here, you see that this candle has never exceeded the two lines. If this candle exceeds the two lines, it means that the sellers will enter, the buyers will continue to push higher. But it happened, the candle here did not exceed the upper line. It means that the sellers are still available. That is why sellers entered on the next candle. Okay, you can see the market is start to go down. The price start to go down. That is how to trade on levels. Now, the question is, why did that even, the question is, Why did I not draw any level here? Here. Why did I use this? That's why I say this is binary option. Always take trade at the extreme level, the external level. Don't take trade at the internal one. So it's not, because all these internal one are just like uh, inducement that induce the trader to enter the trade. Because sometimes if you draw a zone, if you draw a zone from here and you extend it to the right side, okay, it induces the trader to enter trade. It we induce the trader to enter the trade. That is why we have this few movement to the downside. So don't enter trade with internal support and resistance level or internal supply and demand. Always enter trade with the external one, okay? Because the internal one, they are just the inducement, induce the trader to enter the trade, okay? Okay. So if this is inducement, this can be your liquidity. Liquidity is where there's too much money, okay? Some trader put the money, once they enter a deal, they left the money, okay? So it's where traders put their stop loss. So market has to take out the stop loss, take out all the liquidity before it reverse. So your liquidity is sitting around this area. So here it induced the trader to enter trade, meaning in the future, it induced some trader to enter the trade, but not for long. See that after a few sellers entry, the buyers kick in and enter the market. So, and the market did not even respect the zone the second time. It was after it rise up to the external zone and then it reverse. You can see the reversal is not a small reverse. You can see very strong reversal, which you can help you to take trade with a 5-minute expiry time or 10-minute expiry time. So it depends on your choice of entry. That is how you take trade. Don't take trade at the inducement level. Always take trade at the external zone. Now the next one is this. The next one is this. We have this bearish movement to the downside. Then we have this upper movement and then a small movement again, an upper movement, which means that there is a level around this area. Which means that there's a level around this area. So if I want to draw the level, I'm going to draw something like this, okay? I'm going to draw something like this, okay? Because this is the last red candle before this bullish movement. It's just like a continuation of bullish movement. Also, you see some level around this area. It's also called the inducement, okay? We have the inducement here, some level around this area, okay? We have some inducement around this area. So what are we going to do now? We have identified the inducement here. We have identified the next zone. So the market can either reverse from this zone or the major demand zone, which is here. Okay, but I'll make use of this because after this, we have some inducement which allow the buyers to enter the trade for a few minutes and then drop reverse. Okay, you can see the price reverse again to the upside. What happened? The price again visit the level the second time and reverse to the upside, but not for long. That is what we call inducement. But right now, this candle violates the line, and then we have some bullish movement, consolidation, and a bullish trend. but not for long. We also have some kind of rejections from that level, a few buyers entry. So it seems that buyers are now weak, are becoming weaker. Okay, the buyers are now weak. So that is why the sellers keep pushing the down and pushing the price down. So now, when the price visits this level, the price now violates the level, this liquidity area, and then come back to this zone. What happens? We see some buyers entry, the price rise up again, push the price down. Remember, I say that if the buyers actually enter from this level, it's likely they may reverse at this high, because here we have multiple sellers at this area. Okay, we have multiple sellers. That is why we have this strong sellers entry. But if I want to take trade in this kind of situation, we have two external level to take the trade. This is the first one, then the second one is here, which means it is either the market reverse from any of those level, either the market reverse from any of those level, and then we execute the trade. Because here, this is the last red candle before this upward movement. So price did touch the level, not close inside the level, inside the zone. Okay, the price touched the level, not go inside the zone, or actually it closed inside the zone. It's open from the zone. This one I'm talking about, because if I want to draw the zone perfectly, I'm going to adjust the line, place it at the body, this is the last red candle before this bullish movement. So I'm going to adjust the line, place it at the shadow, upper shadow of the candle. Okay. Sometimes you can place it at the body. It depends on the formation of the demand, the base. Okay. But in this situation, I place it at the shadow. Okay. If you want to place it at the body, you still can do the same thing. Okay. Sometimes a lot of people place it at the lowest candle. Okay. But I prefer to trade at the shadow, the upper wick, or I place the line at the body of the candle. But mostly, I place it at the wick of the candle. Okay, so what I'm expecting is the price to open or close inside these two lines, then the buyers will kick in. Let's see what happens. Well, it seems that only got rejection from here. That is not what we are expecting. Only want the price to enter inside, but there was a gap down. So price opened from the zone, buyers enter. You can see this bullish candle, only bullish candle. This means that the buyers enter. So you see this type of bullish movement. It means that where it started is from the strong buyers area. So anytime the market visits that level, you also have the buyers entry. You can see the candle close in between the two lines with a rejection. This rejection shows a buyer's activities. Okay, the rejection is from the buyers, so which means that buyers will enter on the next candle. Okay, that is the first entry, first trade entry. And a candle, the second time the candle closed below the two lines, or below the first line, or in between the two lines, buyers still entered again. And now we are seeing a rejection. You see that when the buyers entered here, the buyers did not go up for a long time. Only few buyers entered. It means that the buyers are not strong enough, like the previous buyers movement here, like the previous buyers movement. So this is buyers area. Anytime the candle close inside the buyers area with rejection, buyers will enter. That is for binary option trading. Wait for a rejection inside the zone, inside the supply and demand zone, then enter your trade. So don't execute a trade on anyhow level or zone. Okay. Same thing happened to this, why we have sellers movement, because I've already drawn the zone before. We have sellers entry, but this candle is still at the supply zone, which is sellers area, and supply zone, which is sellers zone. So we have sellers entry, sellers entry, sellers entry, sellers entry, sellers entry, which means that sellers are there. So if the buyers decided to push the price upward again, then close inside the sellers zone, sellers will likely to enter for a short while. But if the sellers are strong, it might push the price down. When the sellers are weak, the buyers will take over and push the price upward. So that is how you analyze the market. So always pay attention to the key level. Remember the trend. Second, the key level. Key level can be support and resistance. Then again, candlestick pattern. Okay, candlestick pattern. Single candlestick pattern or multiple candlestick pattern. Candlestick pattern like single, we have the hammer candlestick. Candlestick pattern like single, we have spinning top, doji, hammer, pin bar, hanging man. A candlestick with multiple candlestick pattern with multiple candles, we have the engulfing candle, three white soldier, three black crow, evening star pattern, morning star pattern, and what next? Okay, like when you combine two or more candlesticks together, that'll give you a pattern. So that's what I mean by multiple candlestick pattern. Okay, so that is how you trade binary. Always pay attention to the key level. That's the most important. So about the questions someone asked me some days ago on my YouTube channel at the comment section, someone asked me, why did I always trade different currency pair? Well, I always trade different currency pair based on the zone. If I take a trade on the first zone, I take a trade on the second zone, that will be different currency pair. If I take trade here, I'll look for another opportunity whereby I can take the trade on the next candle, on the next zone. Okay. Also, continue like that, See, I accomplish 5 or 10 trades on that single trade section. Okay. So go and practice it. Learn how to trade on the zone. Learn how to analyze the market, the zone, the key level, then enter on trade. Always trade if the candle close inside the zone. Don't trade if candle close below. Don't ever predict candle if you are not sure about it. So always trade inside the zone. Always take trade inside the zone. That will help you. That will even increase your winning rates in binary option. So I hope you understand. Again, so tomorrow I'm going to discuss about the candlestick pattern. Candlestick pattern. Okay. Remember, I said earlier that we have two types of candlestick pattern. We have the single candlestick pattern, then we have the multiple candlestick pattern. Okay, so this will also help you to increase your winning ratio in the binary option trading. So I think I should stop here for today. Tomorrow I'm going to discuss about candlestick pattern. Okay, good night and have a nice day. Bye bye.